In this video, we'll be starting a course on harmonic charts and patterns, in which we'll be starting right from the basics and covering each and individual harmonic pattern in detail. We'll be discussing the fundamentals of harmonic patterns, why they exist, what are the different ratios that they exist, how do they work in different time frames, whether they work in each of these markets or not, what are the advantages of each of these harmonic patterns, what are the disadvantages of each of these harmonic patterns, and then we'll roughly basically discuss some of these harmonic patterns and what are the ratios. We won't be going into a lot of details in each of these harmonic patterns. This bit we'll reserve for later videos where we'll be going into details of each and every harmonic pattern and discuss most of the ratios in a lot of depth. But for this video, this will be an introductory video where we'll be discussing the basics of harmonic patterns and why they exist basically, and what are the advantages, disadvantages, different concepts. This is basically this entire series in this particular case will now be in English. We've already covered a similar course in Hindi previously, and this video series is live on our playlist. If you guys wish and if you guys are comfortable with Hindi, then you should definitely watch this playlist in Hindi, because all the videos right from the basics to basically covering each and every harmonic pattern in detail is already live over here. And the first video, which was the introduction to harmonic pattern, already saw around 45,000 views coming in a very short span of time. So this video will basically focus similar content, but the idea will be for our English for basically shooting this in English for our English viewing audience, so that they're comfortable with it and can understand the basics of harmonics, and then get into the depth of each and individual harmonic pattern and understand the same as well. So now starting with the first slide, where we'll be discussing about harmonic patterns. So basically harmonic patterns are defined by 5 key pivot points, and generally you'll see them in the form of an M or a W. So each of the harmonic patterns will generally have 2 retracement legs and 2 impulse legs. What we mean by retracement legs is when you see the share basically falling down. So in this case, AB and CD will be a retracement leg, whereas impulse leg is when you see a very quick spurt in the price of a particular stock. So XA will be the impulse leg, similarly BC will be the impulse leg when you see the price of the stock running up in a very short span of time. So the M pattern that you see is generally a bullish harmonic pattern, and the W pattern you generally see is a bearish harmonic pattern. Each of the harmonic pattern will have 5 key pivot points, which are generally defined by X, A, B, C and D. D point marks the completion of a harmonic pattern, and it's near this point that you will see a potential reversal zone getting created. So in case it's a bullish harmonic pattern that gets formed, which is in the form of an M shape, then D point will mark the completion of the harmonic pattern and will indicate a strong support zone. And if the price of the stock comes to this particular point, then you will see some support coming into picture for that particular stock, and you might see a reversal coming into picture from this particular point. Similarly, if we talk about a bearish harmonic pattern, again you will see a 5 pivot point harmonic pattern, 2 retracement legs, 2 impulse legs, but this time the D point will be at the end of this impulse leg CD and will mark basically the completion of bearish harmonic pattern, which would indicate that this might act as a resistance point for any particular stock or index or commodity, whichever you are trading, and the price of that particular instrument might fall down, as there is some potential resistance zone, some potential reversal zone that might happen. Now it's important to note that at both these points, it's a potential reversal zone that gets created. There's no surety that price will always reverse or not. It just simply means that it's a temporary support zone or a temporary resistance zone that has been created in the share, and because it's there, so there's a possibility that you might see a reversal, but there's no short way of saying that that price will definitely reverse from this point. It just indicates it's a resistance or a support zone that gets created in that particular instrument. Now, before we go ahead a lot in detail, what's important to understand is that harmonic patterns are basically built on top of Fibonacci ratios, and these are basically patterns that strictly adhere to Fibonacci ratios that are defined in the market. They will work very well in any particular market, and they will work extremely well in any particular time frame. So for instance, if you're learning the entire harmonic course in equity markets and with examples on equity charts that one can trade in the cash market, the same concepts will be extended to the commodities market, and the same concepts will be extended to the currency markets as well. So they are flexible in that sense that the learnings that you take from this particular course will be extended in currency as well as the commodities market, and they are extensible across time frame as well. So if you are plotting and if you are basically practicing your charts on a daily time frame, the same charts, the same ratios will extend over monthly as well as yearly time frame. So your learning does not basically go waste. It gets reused across markets, across time frames as well, right? And the third point, as we mentioned, that these are basically, they provide you with the completion of harmonic patterns potentially indicate a reversal zone, potential opportunity for traders to enter the stock or basically short the stock and take advantage. But again, since they're not 100% sure, but short way of making money, so it's important to adhere to stop losses for them, and we'll of course go into details of that as well. But it's important to understand that it's a potential opportunity, and therefore if trade goes wrong, then executing that stop loss is equally important as well. Now, before we go into more details, just a quick recap on which all harmonic patterns are there and which all are the ones that we'll be discussing over here. So all the harmonic patterns that exist, there'll be a bullish version and a bearish version of each of these harmonic patterns. If you've been following our channel, we've at times discussed some of these harmonic patterns before as well, and mostly the harmonic patterns that you will see being talked about will be Gartley, butterfly, bat harmonic pattern, crab harmonic pattern, shark, and cipher. Now these 6 harmonic patterns you will see pretty often, and in this particular course we'll be covering each of these harmonic patterns in a lot of detail to discuss the different ratios that exist for each of them. And for each of these harmonic patterns, there will be 2 versions, the bullish version and the bearish version. Each of course would help you in predicting whether the share is, whether that particular script or trading instrument is near a support zone or a resistance zone. Other than that, you will also see the ABC bullish, bearish harmonic patterns, AB equal to CD, and the 3 drives. But for this course, we'll first focus on these 6 harmonic patterns and discuss with you all of them in slight details. Before we go to the advantages and disadvantages, a small request from all of you guys. If you guys trade actively in the share market or invest actively in the share market and you still haven't opened an account with Zerodha yet, then we strongly recommend you to find the link for opening your account with Zerodha in the description of this video and to open an account today itself. Zerodha is basically a discount broker which doesn't charge any brokerage for delivery based trades, and the brokerage charged on intraday trades is extremely minimal. So if you guys are still using a conventional broker and paying 0.5% or 1% brokerage on buy sell rates, then please find the link to switch to Zerodha today itself and save on your brokerage charges. If you haven't joined our Telegram channel, then once again you can find the link for our Telegram channel and join us over there. Now coming back to the advantages and disadvantages of harmonic patterns, we'll first go with the advantages and then basically slowly come to the disadvantages. So the first advantage of a harmonic pattern is that it's a leading indicator. What we mean by leading indicator is that it can help you predict the price of a particular, the future price of a particular stock. What we mean by that is that, as we discussed, these are 5 pivot point patterns that exist in the market. So when you see a particular formation being set up, so for instance the share the CD retracement leg crosses point B. Now you can predictively guess that, you know, if the share does come down the point to the point D, that's when the support point gets completed, and therefore it helps you get a sense that if the share does fall down below some support level, then what is the future price point that you can expect where a support might exist for that particular script or stock or index, whichever instrument that you are trading. So that's why they are leading indicators, basically, which help you predict the future price that might happen in that particular instrument to some degree. Not always, but to some degree. It's never a surety that the price will always come down to that level, but if it does, then you know that there will be a support zone that exists for that particular stock at that level. The second advantage is that these are frequent, repeatable, and slightly reliable. So what we mean by reliable over here is that and that's also very closely linked to one of the disadvantages, that harmonic patterns are slightly difficult to make, and it takes a lot of experience to sometimes make these harmonic patterns. So since it's slightly difficult, so not a lot of people are comfortable plotting these, and therefore they become slightly lesser known and lesser viewed when it comes to the trading world. Now when that happens, because it's less known, so generally the reliability of these becomes slightly higher. And since they occur across different time frames, therefore they are frequent, and they are repeatable, because in the same script, in a time span of 6 to 8 months, you will see these harmonic patterns existing across multiple times in these 6 months. So because they occur in the market very frequently and are reliable, so they give you more chances of entering the market and making profits. Third, of course, is because they are standardized using Fibonacci ratios. So basically, since these ratios exist, that they work across all time frames and across all instruments, and these are standardized patterns. So because they are standardized patterns, that whatever you learn across one particular instrument gets replicated across all instruments, and your learning curve will not be very high across instruments. So whatever you learn in the equity market, you use it again in the commodities market. That is again one of the advantages. The last one is that since they are again one of the ways of basically finding out a support zone for a particular stock, so it's best to use them with some other technical indicator. In this case, what we've mentioned over here is that you can potentially use them with other technical indicators like the RSI and MACD. Now these are technical indicators, and again we'll be covering a video series on these as well, hopefully. The video series for these also are live in Hindi, so if you guys are comfortable with Hindi, then please do head over to our channel and watch them in Hindi. But if you aren't, then wait for the English versions of it. But generally, since these patterns are again an indicator of the support and resistance zone, so it's best to combine these patterns and use them with some other technical indicators like the RSI or MACD, or just figure out some kind of good candlestick charting and utilize those powerful candlesticks to time your entry and exit into the market. Now, disadvantage one, we've already discussed one of the disadvantages, the biggest one being that these are slightly complicated and slightly technical to make and understand. Therefore, it becomes slightly difficult to plot them specifically in real time and even to automate them. Next one being that predicting extensions can be difficult. What we mean by predicting extensions is, and we'll just quickly reference a future chart over here, but when we see these different harmonic patterns, right, you will see a lot of the times the final retracement ratio that happens, the CD length, which basically will also help you define the XT ratio, is slightly flexible. What we mean by flexible is that this ratio can actually extend from, let's say, 1.6 to a higher ratio. And specifically when you will see a bullish sharp kind of a harmonic pattern, the XT ratio can actually vary from 0.886 to 1.13 and so on. Now that basically makes a bit of a challenge at times to understand these patterns, because that ratio is not well defined. It can get it's well defined in the sense that there's a particular range, but at times guessing that range can become slightly challenging in terms of the loss that you might actually incur from the same if the first ratio gets breached, and waiting for that extension ratio. So that becomes slightly challenging at times. And the last one is, of course, classic, that they might sometime at times generate contradicting signals in different time frames. So what we mean by that is that if you are plotting a particular instrument in a smaller time frame, let's say on a daily chart, and then you go on a monthly time frame and plot the same, you might see that in a larger time span, basically the chart indicates a bearish harmonic pattern, which means that it's near to a resistance zone. But in the smaller time frame, you might see a bullish harmonic pattern getting completed at the very same moment, which might mean that for a particular time there's a small support zone. The share might go up a little, but in an overall scheme of things, it's still bearish, and the share might go down as well. So these contradicting signals become slightly hard to read at times, and might require a lot more experience and expertise before you can actually start trading them. So these were some of the disadvantages that one might see basically when they are trying to trade harmonic patterns, and are slightly difficult at times. But with sufficient practice, you would definitely gain expertise in there. Just before we wrap up this particular video, we'll just be discussing and giving you an overview of what's to follow in the coming videos. And once again, if you wish and you are comfortable with Hindi, then all of these harmonic patterns in detail have already been discussed, which you can see through. Now coming back to this particular case, so what is expected in some of the next videos is that we'll be discussing each of these harmonic patterns in depth. Just to give you an overview, we have the bat harmonic pattern, both the bullish and bearish version, the crab, butterfly, and Gartley. Now what we'll be discussing in some of these coming videos is how each of these ratios form, and what all are the things that are extremely important for the harmonic pattern to actually adhere to and actually give you more reliable signals. So for instance, if we are talking about the bat harmonic pattern, one of the things to note here would be that the ratio of XB, which is right now 0.5, is slightly flexible in the sense that it can actually vary from 0.382 to 0.5. So if XB as a ratio was actually here, it would still be a valid harmonic pattern. If it was slightly higher, it will still be a harmonic pattern. So some of the lengths over here for each of these harmonic patterns will be variable, and that's what we'll see in the details. And it's important to know these because that's what will help you understand and keep a precise stop loss for when the trade actually goes wrong. So some of these ratios will be flexible, some of these won't be. For instance, XD as a ratio has to be 0.886. Similarly, when you see basically Gartley harmonic pattern over here, you'll see it's pretty similar in structure, but the retracement leg isn't as sharp as the bullish bat. Then when you'll come to the crab harmonic pattern, you'll see the retracement leg is actually extremely sharp. So whenever you see a super sharp correction coming into picture, you are most likely going to try and find a crab harmonic pattern in that particular market rather than any of the other ones. Similarly, if you see butterfly as well as crab, both of these have this unique thing that the retracement leg CD basically goes beyond the point X, which was the first point of the harmonic pattern. Whereas for Gartley as well as bat harmonic pattern, the retracement leg is much above this, and for the crab harmonic pattern, it's much below this. So all of these basically are set up on well-defined Fibonacci ratios, but the length of retracement and the length of the impulse leg defines which harmonic pattern is most likely to get followed. So again, 2 impulse legs, 2 retracement legs make a complete harmonic pattern formed by 5 key pivot points, and each harmonic pattern will have a bullish and bearish form. The bullish form will generally be in the structure of an M, the bearish form will generally be in the structure of a W, and together basically they complete harmonic pattern, which gives you support and resistance zones for a particular stock or a particular index or script, whichever you are trading. And these are potential reversal zones, which means that a temporary support or resistance zone has been created, which might get honored or which might not get honored based on how other things are. So that's it for now. We'll take a pause over here. We'll definitely come back with more on this. We'll go into details of each of these harmonic patterns and some of these have already been taken care, each of these in fact, but in Hindi, and now we'll be taking care of that in English. So that's it for now from our side. If you've enjoyed this video, then please like it, share it with your friends, and subscribe to our channel. If you guys have any feedback for us, please feel to comment that in the section below. And that's it for now. Thanks for watching once again, guys.